From the trading desk of DailyForex.com, this is Christopher Lewis looking at the upcoming May 3rd non-farm payroll trading session in the Euro US dollar. You can see that Thursday had a significant move in the Euro US dollar as the ECB announced a rate cut. And quite frankly, that would have been foreshadowed by the shooting star that we saw on Wednesday. I mean, after all, really can't think of a better place to see that shooting star for a pullback. I have to admit, though, the reaction was a bit more than I would have anticipated, just simply because a lot of the market participants thought the ECB were going to cut rates. So, quite frankly, it's a little bit of mystery as to why it was that significant. However, having said that, you can see I have a 200-day moving average on the chart, which has gone flat, and that has something, at least some bearing, on what I think is about to happen. I think we are going to continue to go sideways, even with this wicked candle. The reason is that I have noticed over the last, say, year or maybe even year and a half that non farm payroll Fridays end up being essentially non events based upon the close. Now, during the session, there's a lot of volatility, but what I have found is for the most part, uh, this scenario that we find ourselves in a lot of times will give the market a reason to rally even after we sell off. So, for example, if we have a poor jobs number, the natural order of things typically is to plow into the dollar because people go into the treasury markets, they safety trade, etc., which is kind of counterintuitive, but that's the way the dollar works. Now, what will happen is sometime during the session, probably after the Europeans go home, the Americans will start to think and they'll stop and they'll say, hey, wait, if the employment number is really that bad, that means the Fed is going to continue the quantitative easing even longer and perhaps expand it based upon the statements that they made on Wednesday. And then a lot of times you'll see a reversal. And that's essentially been the attitude of the non farm payroll Fridays, unless there's something that leans completely in one direction. That's almost never the case. So, my suspicion is that if we do break down, we're going to see something in this general vicinity that will keep the pair up. However, I do have some levels that I am watching, one of which is 129.50. If we get below there and close below there on at least a 4-hour candle, I'm willing to go ahead and take a shot at shorting this pair because it is with the overall trend, obviously. Although the 200-day, like I said, is flat, and that shows lack of interest as far as I can tell. Alternately, if we manage to break above the shooting star from the Wednesday session, that would be a very strong move, and I would have to think that the pair goes higher at that point.